Welcome back to the Property and Mortgage Insights Australia 2025 podcast. I'm Virginia Graham, a mortgage broker and co-author of Flirting with Finance and your host, joined today by our guest, the exceptional broker, Phil Riches.
Thank you.
From Finance on the Coast. And today's topic is the budget, which was handed down today. So what we wanted to know about is the first home buyer changes and foreign property investors.
Sure.
And just sort of generally what the changes are and how they will affect people.
Sure. So the two changes in the budget affected foreign investors and an expansion to a government scheme called Help to Buy. And Help to Buy is a scheme where the government will actually fund your deposit in simple terms. And what they will do is they'll put in 30% of the property value. Now, they're not doing that for free. What they are having in return is they will have representation on title, so they actually own 30% of your property for the term of its ownership. You imagine in the future there'd be ability to pay them out. But one consideration for that scheme, just quickly before I mention the changes, is that if you bought $1 million property, the government has a 30% stake, meaning 300,000, and the property in 10, 15 years' time is worth $2 million, government stake is worth $600,000. So it helps you get into the property market, which is great. But there is also a consideration there for the fact that their 30% isn't only based upon the time that you're buying. They're going to get the benefit of the capital growth in the future, which obviously, if you looked at it compared with outside of that scheme, the capital growth on your property as it goes up in value is all yours. So in terms of what the budget announcement was, and it's quite funny with budgets. They announce things and it throws up a lot of questions for everyone, and they don't really give the answers just yet. They just want to tell you this is what we're doing. So later this year, the scheme for the Help to Buy will be rolled out and expanded so that the property values, the minimum property values, are higher than they were. And so, just to give you an example, I'll use Sydney metropolitan area, or the Greater Sydney area. Then the highest property value, recognising that property prices in Sydney are high, is 1.3 mil. And so the other terms of that scheme is that if you're a single applicant, there's to be a restriction on the amount of annual income you can earn before tax of $100,000 to qualify for the scheme. If you're a couple applying for this scheme, then your combined incomes cannot exceed $160,000. So that's essentially how the scheme works and how it looks in Sydney. There are different caps in different states according really to what the median house price is in that area. So Brisbane, for example, is $1 million, and Melbourne and some of the other capital cities are lower. But all the same, it could be really useful for somebody wanting to get into a property. They don't mind, or they acknowledge that the government will own a share in that property as well. And really that's what the budget announcement was. I would like to very quickly talk about another change which in the budget, which is around foreign investors. And then I want to come back to the first home buyers, because I think that the first home buyer scheme, I'd like to throw something else out there that's certainly worthy of a mention anyway. So basically with the foreign investors, unless a foreign investor is buying land and building a property or buying off the plan, there's a temporary 2-year ban on foreign investment on an established dwelling, whether it's a unit or a house in Australia. The rationale for that is because of the heated property market. As soon as mortgage interest rates stabilise or start to come down, the idea is to give a chance for first home buyers to be able to get into the market in preference of a foreign investor, which makes a lot of sense, really. You know, that dream of home ownership in Australia has got harder and harder to achieve as time goes by. And I think any changes in that space to help stabilise property prices for first home buyers is a good move. Now, coming back to if you are a first home buyer or you know a first home buyer and they want to know what options are available to them, the scheme that we just mentioned, where there are changes in the budget with a $1.3 million threshold on the purchase price, is very good. But I think it would be remiss to not at least mention that there are other government schemes which might save a bit more money if we can keep the budget down and find a property with a bit of a lower maximum purchase price. So again, I'll use Sydney as an example. There's a government scheme where if you've got a 5% deposit, you've either saved it up over a period of time and you can show that, or you have been gifted it and you've held it in a bank account for at least 3 months. That's called genuine savings, and that's a lender requirement and a government scheme requirement. What will happen in that instance, up to $900,000 property purchase price in Sydney Metropolitan, and in regional areas capped at around 550, recognising that property values are lower in regional areas, you can basically put your 5% deposit down, and it's a true 5% deposit home loan. The only other cost to you will be whatever your legal fees are for conveyancing, usually say $1,500. And you're into that property. Now, there are a restriction on the number of lenders in that home guarantee scheme. There's around 15 to 20, so there's a good mix of banks and non-bank lenders to choose from. They're in the scheme. As with the scheme where there was changes within the budget, there's a maximum number of places within that scheme, around 35,000 places in the scheme. So it's a generous allocation. So going back to where if you can maximise your purchase price at 900,000 in Greater Sydney area, you've got your 5% saved, or you've been gifted 5% and you're going to put it in a bank account in your name for at least 3 months to meet the genuine savings rule. You've got steady employment and income, and an income threshold from the government for a single applicant of 125,000 per annum before tax. You can then get a really sharply priced home loan for the other 95%. But the key differences are you don't pay any stamp duty. So the stamp duty is considerable cost on a property in New South Wales for $700,000, $800,000, $900,000. You're looking at stamp duty of somewhere between $35,000 and $45,000, which doesn't benefit you other than it's an obligation to pay stamp duty when you buy a property. And it's usually an upfront cost. There are ways of potentially spreading that cost out over the term of the loan, but it is money down the drain. And then outside of the government scheme, normally with a 5% deposit home loan, you have to pay mortgage insurance, which in round numbers would be somewhere between $20,000 and $25,000 on the amounts that we've just talked about. So you've got potentially government assistance to save anywhere from, on those budgets we talked about, from $60,000 to $70,000 that would have otherwise been money down the drain. Now, with the scheme I mentioned in the budget, there's no stamp duty waivers there. So on a $1.3 million property, if you pushed it that high, you're looking at a $65,000 stamp duty.
And you have to pay that.
You do. And really, I mean, stamp duty originally came about from stamping, state government stamping documentation like mortgages and such forth, and contracts. And it's become a cash grab, you know. So it's money down the drain. And if it can be avoided, great idea to do that. And in the second scheme I just mentioned, that's the alternative to the one in the budget, I think it really could it really could set you up for your financial future better. It gets you on the property ladder with nobody else other than yourself with an interest in that property, nobody other than yourself benefiting from the capital growth. And even if it's not your dream home, this is the key thing for me with first home buyers. Most people want to buy something they aspire to live in. But for me, get on the property ladder, get a nice property, might not be your dream home, but it will be a stepping stone to buying your dream home, whether that's the property you buy after or the one after that, or whatever progress you make within your property ownership lifetime. It's really getting into the market, avoiding as many unnecessary costs as you can, and going really hard at your mortgage and trying to use an offset account and paying extra off your loan to get that mortgage down as a priority over going on holidays and all those sorts of things. We've all got to live, but really going hard at that mortgage for a first home buyer is absolutely key.
And what about if you bought a property with the government, say you bought a $1.3 million property here in Sydney, and you bought a property and then in a year's time you sold it and it had gone down, what happens then?
So basically in that instance, it remains to be seen because it's such a new scheme. But the government owns a percentage. So if it goes up in value, they own a 30%. If it goes down in value, they own 30%. It's highly unlikely unless you've overpaid in the first place in a major capital city to see a property go backwards. But it's a good question really, because not everything goes as we all think it will. And that is why property should be looked at particularly as an investor, as a minimum 10-year investment. I'm not a fan of buying a property, dressing it up and then selling it because of that stamp duty factor and the mortgage interest. Let's say you're digressing a bit, but if you bought a property that needed some attention, you're still paying stamp duty on it, you're still paying interest on your mortgage on it, and then you're paying to improve it. You might be able to flick it in 12 months' time and make a bit of a profit. But really, when you deduct the stamp duty and the interest costs off your profit, it's very rarely as good a profit as it seems to be. So I'm just always been a fan of buying a place that's in a state of good repair and that you're looking at as a long-term investment.
Yeah. So that would be for investors.
Yeah.
Yeah. Okay. Well, thanks so much, Phil.
Pleasure.
We'll have to have you on again soon.